Welcome everyone to the Smart Senior Series interview with David Leslie. Today we're going to be talking about what the heck is a Heckum. I'd like to introduce our guest, David Leslie. David is with Mutual of Omaha Mortgage, and David is one of the sponsors of our Smart Senior Series as well. But to let everybody know, we choose our partners with senior downsizing experts and the folks that are sponsors of our Smart Senior Series because, number one, they're passionate about working with aging adults and seniors. And also, as partners, we consider that they are best in their fields that we've been able to find. How are you doing today?
I'm doing well.
Good, good. So what I'd like you to do, David, is share with our audience just a brief bio and background on yourself and how you ended up working with Mutual of Omaha Mortgage.
Okay, well, I actually started my career flying airplanes. I was, after graduating from college, I was in the Air Force and flew airplanes there for about 7 years and then got out, flew airplanes and decided I didn't want to continue doing that as a career. So I got into real estate, sold houses as a realtor for a while, and then I got into mortgage financing. And that was in the 90s. I've been doing mortgage financing, traditional residential mortgage financing for a number of years. During that time, I also had a Series 7 and Series 63 license, worked for a few years as a financial planner. Ultimately kind of came full circle with all of that background and ended up discovering the product I sell now, the Heckum product, about 3.5 years ago. And the company that I started with, called Retirement Funding Solutions, was bought by Mutual of Omaha about 2 years ago this summer. And so that's how I got here. And the background that I have selling real estate, working as a financial planner, and the details I got from flying airplanes have all helped me to do what I think is a really good job of helping to educate my clients on this product and whether or not it benefits them in the retirement years.
Yeah, I think that's a great background, especially you were in real estate and traditional mortgages as well as a financial planner. It really probably puts you ahead of a lot of your peers because of your ability to consult and understand their financial needs better. So a couple other questions.
You're breaking up a little bit.
Do you still fly planes?
I haven't flown for a few. Well, I haven't flown for a few years, and when I do, I usually go with someone that flies, but then lets me fly.
Yeah.
But I haven't been checked out individually. You always carry your pilot's license, but if you're going to fly other people around, you have to either own your own airplane or get checked out somewhere and have an updated medical certificate. So.
Right. Yeah. Well, that's cool. So I guess the next question is for you. We've been saying Heckum. What the heck is a Heckum?
Great question. I get asked that a lot. But a Heckum is just an acronym for a home equity conversion mortgage, HECM. And it's an FHA insured loan. And it's commonly referred to as a reverse mortgage, but sometimes the reverse mortgage is just kind of a misunderstood name. So we kind of start off talking about it as a Heckum and then go down the road to the reverse mortgage conversation.
Yeah, well, and reverse mortgages aren't a new product, are they? They've been around since, what, the 50s or 60s?
FHA's been insuring them since the late 80s, came in under the Reagan administration. They haven't been used in Texas, though. They were originally approved in Texas in '97, but no one really did any of them until the year 2000. So pretty new in Texas.
Okay. Right, right. So what are some of the ways a person could use a home equity conversion mortgage?
Well, the home equity conversion mortgage helps someone that they've got to be over the age of 62. So it's someone either approaching or thinking about retirement or in their retirement years. If they want a number of seniors or baby boomers in this age group want to live or stay in place, age in their home. And so it allows them to stay in the home. And if they have a mortgage right now, can use the HECM to pay off that mortgage and not have a mortgage payment. You do have to pay your taxes and insurance, but that sometimes helps them with their monthly cash flow. Another thing you can do is just use it and set up a line of credit that gives you access to money in the future should you need it for the different shocks that can come during retirement, whether it's a shock to your portfolio with a down market or a medical shock or something like that. So we'll call it a shock absorber sometimes. And then a number of the clients that I work with are wanting to buy that last home, and so they use it as a product to purchase a home. And you can get in using a HECM for purchase. You can get into a $300,000 house, let's say, for about $150,000 total out of pocket, as opposed to paying cash, and then have no monthly mortgage payments, again, outside of your taxes and insurance.
Yeah, that's pretty neat. I know it's allowed, we've worked together with some clients and it's allowed them to get more home, like a new build. Maybe they originally thought that they were only going to be able to get a home under 300,000, and then they could maybe step up to something with 400,000 with what they had saved for a down payment or putting that. So it allows them a lot of times to get more home or a newer home, but you can also use it to get a pre-owned home too, correct?
Oh, sure. Yeah, they can purchase. There's really not a restriction on what kind of home they can purchase. I mean, there's a few, but for the most part, they're the same as any other FHA rules on what type of home. And it really is a great way to I consider during your working years, and you're making that monthly mortgage payment and you're building that equity, that's another bucket, just like the IRA bucket or the 401k bucket. Only now you can use this bucket and your reward is, maybe a little more home than what you thought, yet you can still avoid that mortgage payment. So great. It's a great program.
Mm-hmm. Right. And, some of the people that were planning to get a traditional mortgage, if they want to take that money they were using on their traditional mortgage back into their HECM or
Can't quite hear you, John.
Okay. I'll repeat the question. These internets are fun to deal with sometimes.
Yeah.
I was just saying that somebody that had considered a traditional mortgage to buy a new home, instead of making payments on the mortgage, they could, if they still wanted to make payments, they could pay back into the HECM, or they could put that into another investment. They don't have to, but those are some of the options they can do.
Yeah, and that's the correct, and that's a couple of things people don't always know about the HECM, is that you can actually make payments on the HECM, and any money that you pay in is available for you to use again in the future. So it sits in a line of credit that grows over time. The other thing is, a lot of time this product, if someone's actually in their retirement years and on a fixed income, they'll find they can't qualify for a loan, even though they're comfortable making the payment. They just don't fit the guidelines for traditional financing. And this is a great product to use in that scenario as well.
Yeah, that's That's a great point. That's a great point right there. So why would somebody use a HECM for a line of credit as opposed to a home equity line of credit, or pulling equity out of an existing home?
So yeah, I think I understood your question. Using the HECM instead of a HELOC or home equity line of credit. A couple of the advantages with a home equity line of credit, you do have to make payments on it. And a lot of times the initial payments are favorable because it might only be interest only for 10 years. But 10 years down the road, you've got to start paying principal and interest in your income. You may have hit some of those shocks and you don't really have the income to make that principal and interest payment in the future. Another thing is on a HELOC, you may think you have access to the funds, but down the road, if we have a downturn in the housing market, the bank can actually freeze your line of credit or even make it go away altogether. That can't happen on the HECM. Once you have the line of credit, it's set there. And again, you can make payments if you choose, but you never have to make a payment as long as you're living in the house as your primary residence. Were you able to hear me?
Okay. That was really broken up. We had some bad internet. You probably had trouble hearing mine, but let me just summarize. You said on a HELOC or home equity line of credit, the challenge with that is if market conditions change, a bank can freeze that and then you won't have the line of credit left. I think in the last mortgage crisis, they were recalling loans.
No, they absolutely were. And a couple of banks just recently this spring even pulled out of issuing lines of credit for the same reason. They thought the housing market might go down.
Yeah, and so what about the refinancing your home to pull some equity out?
Well, again, refinancing it, you're going to start a mortgage. One, you have to qualify, and it may be different to qualify for that. Two, you're going to have a mortgage payment, and so the cash flow from that mortgage payment versus not having a mortgage payment is something to consider. And there may be situations where those make more sense. And I do have relationships with other lenders to try and, if it makes more sense for someone to do one of those traditional things, we certainly talk about that, the upside and downside when you're comparing them. But those are really unique to different individual situations.
Right. Good. All good points, David. So on the other side, why would somebody want to use a HECM or home equity conversion mortgage to purchase a new home?
Well, man, that's just my favorite topic altogether.
Yeah.
I mean, just the opportunity to get into that, if we want to call it the last home, a lot of times that's what it's referred to me, is instead of a first-time home buyer, I'm a last-time home buyer. And now I'm going to get the home of my dreams, and it's going to be for about 50 cents on the dollar. Because many of the clients I deal with were considering paying cash because they don't want that mortgage payment. And now you can get the upgrades you want. Should you be buying a brand new home, you can get the upgrades you want. You can get the lot you want. Maybe a slightly larger house than you thought you could get, and yet it's not going to impact your out-of-pocket expenses. It's actually, you may have money left over that you can throw into another investment and help feel more secure in your retirement. Or it may just be money that you want to take a vacation or something like that. But you're able to tap into that equity from the house you're selling, if that's your situation, and buy more house than you thought you could buy. And it's just really a lot of fun to work with clients when they're doing this.
Yeah.
And that new home, if it is a new home, it's a lot of times more energy efficient, one story, easier to manage. Sometimes in a neighborhood where there's more empty nesters and or even an active adult community, where there's a lot of activities.
Mhm.
The program has literally changed the lives of a lot of people I work with, and it makes it a lot of fun.
Yep, you're absolutely right. And you and I have worked with a number of clients together who bought their last home, which was like a dream home to them.
Yeah.
Because they, instead of using all their cash, it allowed them to get into something, or some people that, even if they wanted to pay cash, they didn't have enough to buy that nice new home, then that gave them the ability to do that. So what are some of the concerns people have about using a
You broke up a little bit there, but I think you said, what are some of the concerns people have using a HECM?
exactly?
Okay. That really varies individually. Sometimes the concern is, they want to leave the house to their kids, or they want to leave their kids equity from the sale of the house. And so, this would impact that. And when I meet with someone, I show them how you may not be able to leave quite as much equity to the kids, but in a normal scenario, there is going to be some equity left to the kids. And we run through numbers that show them, they just show them how that potentially could happen. There is the expectation that there's going to be equity left. Trying to think that's the one that comes up the most. As long as you're able to stay in the house as your primary residence, you're not going to ever lose the ability to stay in the house, and you're never going to be required to make a mortgage payment. You just have to keep your taxes and your insurance correct.
Yeah. But that, I got a couple comments. With the interest rates as low as they are, not only does it make it easier or less money is required to get into a home now with these interest rates, but I would think that would also allow the equity to be there a little longer, because that interest isn't eating away on that balance out there. Is that correct assumption?
Yeah. I mean, and that's true. But I can tell you that a lot of the people that I work with, sometimes that equity is just not the most important thing to them.
Right.
And so the interest certainly helps right now. It helps you get more equity out of the house, which means, more of an equity loan or less money out of pocket on a purchase. But the down the road part doesn't really impact people as much once they understand the program, because what they're really wanting is, less money out of pocket for a purchase, or a little more equity to have access to right now, or for the line of credit.
Yeah. Well, and I have had some clients that say, my kids are going to be okay. I'm not worried about me leaving them this or that or whatever. I think one of the other concerns is, and what if the market takes a negative turn and the parents have to move out, and the house is upside down, if you will, in negative equity? That's not the traditional foreclosure, or it doesn't affect the owners of the home or the heirs in any way, does it?
Yeah, that's a great question. So it is an FHA insured loan. So if they decide to move, or they pass away, they're no longer living in the house as the primary residence, and they're upside down at that time, then let's use the example, they owe $200,000 on the loan and the house is worth $100,000. Okay. Well, in that scenario, if they sold that, they could just walk away from the house. They could give the keys to FHA, move on down the road. No recourse to them. There's no impact on a credit report or anything like that. Now, if they've passed away and the estate is dealing with the sale, and the market value comes in at $100,000 and the loan balance is $200,000, the estate can either give the keys to FHA, Or if the heirs wanted to own the house, maybe they thought the market would come back, so they wanted it as a rental property, they could buy it for 95% of the appraised value. So in that scenario, $95,000, and that would satisfy the $200,000 loan.
Oh, wow. I didn't know that. So if they're upside, it's not of what's owed on the loan, it's of the current appraised value.
Current appraised value.
Yeah. Yeah.
And
Well,
so for the heirs, it's like a built-in short sale.
yeah, that's good to know. So, what have I missed? Is there anything else that you want to share with folks about the home equity conversion mortgages?
I just say get educated and learn about it is the most important things, because there's misunderstandings out there. One, we've talked about the equity. You always get equity. Two, you can never be kicked out of the house. As long as you keep the taxes and insurance paid, you can stay there no matter what the value of the house is in the future or how long you live. But I think it's just important to at least consider this as an option, because there's a lot of variations and things you can do that you won't really read on the internet. And when we talk, they may fit into your scenario, you being whoever I talk to. And you may find this program is something you really should have considered. I've done this loan for people that could have paid cash for their house 3 or 4 times over, and they still used this loan because of the leverage play and how it helped secure their financial future and their legacy.
Yeah, and there's so much misinformation about the product, because some people get a negative connotation when you say reverse mortgage, but things have changed a lot. And I know some financial planners that have actually used the product to purchase a home. And I know, David, when you sit down and consult, you consult with the whole family a lot of times, the children and things who are nervous about it, or even the client's financial planner. You've sat down with them and explained the product, and in most cases have been able to ease their mind and show them how, if it's the right product for them, it would be a good choice. Yeah. And because of your background, you're not going to steer somebody where it wouldn't be a good scenario either.
Right. I prefer to talk with the kids and with everybody involved. Mom and dad will usually tell me we're going to make the decision, but they just like to, involve the kids. And I just think that's real important, and the financial planner as well, because those are trusted people. I'm
Right.
not usually known to them. And those trusted people certainly have input. And when they understand the program, a lot of times they come to a different conclusion than what they found, either by Googling it or just what they heard from somebody. And that's my goal, is that they understand the program.
Okay. Well, thanks again, David. And for everybody watching, if you want to contact David, there'll be a slide after this interview that gives David's contact information, or how you can contact senior downsizing experts, as well as, if you're watching on YouTube, we'll put some down in the description, contact information. So just let us know if you have any questions about the Heckum, or feel free to call David directly and we'll supply you with that information. Thanks a lot, David, for taking time to talk to us today.
Thanks, John. I appreciate it. It's really great.